There are so many moving parts right now. I mean, there's just the general question of the sort of the pure economy and the degree to which that's recovering. There's the virus itself, which is also its own distinct thing at this point that has to be measured. And then, of course, the election. From your perspective, what is sort of the key thing that investors need to be watching first and foremost here?
Well, it's great to be here with you. Well, first and foremost, everyone is focused on the U.S. elections, and we've seen a real sea change here. I mean, the market's kind of come full circle from thinking that if you had a blue wave, it would be bad for the markets. Now thinking if you had a status quo Trump and a Republican Senate, that might be the worst thing for the markets. But the immediate focus is on whether the elections will be orderly. And that's even more of the focus now than the actual outcome. And I think that that's the first thing markets are focused on. But then they're focused on just the rebound after seeing such a synchronized downturn in the second quarter, and just off of the collapse, such a synchronized upturn in the third quarter. You're now in the fourth quarter, heading into that murky period. And we warn everyone that not to confuse a rebound with a recovery. We still are calling this an incomplete recovery. We think you're still going to be 4 percentage points below where we were pre-pandemic at the end of 2021. And then there's just the health crisis. Where are we with a COVID vaccine? And you see slowly that parts of Europe are reclosing again. Is there a second wave? Is a vaccine? So I'd say that these three things are the focus right now, with the elections being front and center.
Let's focus in on the elections first and foremost, Joyce, and how the people you're speaking to as your role of global research chair, what you're delivering to your clients at the moment and what they're drinking up in terms of how to assess and change their portfolio ahead of this monumental event.
Well, the polls have clearly moved towards the blue wave scenario. And so the focus right now is really on the Senate. So we've done scenarios. We've done the blue wave, the status quo, and the Biden presidency with a split Congress. And the way that we've tried to frame this is, first to just look at what the implications are with respect to the fiscal package. Are we going to get this front-loaded fiscal package by early 2021, which the market is anticipating? And that's where the Senate race becomes just very important right now, because it was not even easy to get $500 billion through on that skinny bill with the Senate Republicans. So now you're seeing that there's a lot of concern if you do have a split result, is there going to be more tension as Republican hawks come back? So that's the first question is really about, if it is a blue wave, what kinds of appointments will it be? How quickly could we see a fiscal package come through? But I think the market is feeling that, something has to be done on the fiscal stimulus side, because there's enough uncertainty about having an effective vaccine that's widespread that you really do need a fiscal package to, carry to carry us through this period. So the market has sort of confidence that irrespective of the election outcome, you will see some type of fiscal package forthcoming.
Is that the main thing? I mean, it's very interesting to me because I think there was a point in which, the stock market was doing extremely well under Trump, and maybe people interpreted the prospect of a Biden victory or a blue wave. At one point, I would have seen that as a potentially, it's easy to imagine people would have thought that was a negative, and it really does seem to have shifted. Is that entirely all due to this prospect of fiscal stimulus? And from a policy standpoint, is fiscal above everything else right now? I mean, there's also, in theory, tax rates and who a Biden administration might appoint as Treasury Secretary and regulations. But is it really just all about that potential fiscal deal right now in terms of what drives the market?
Well, it's not just the fiscal deal. I mean, we really do have to look at what happens with tax policy, because you would have to think that if it is a blue wave, that they would try to put some of these changes into place in the first year of the administration before the midterm elections. And looking at the Build Back Better plan, there's a target to try to raise revenue from 16 to 19% of GDP in the first year. So what we've done is the following. We've basically looked at what if you reduced half of the tax benefit that was was put into place. This is what our U.S. equity strategist team has done. And they do see that that takes about $9 off of EPS. But on the other side of that, you have proposals to increase the minimum wage to $15. You also have the $2 trillion infrastructure program with a real focus on a green recovery as well. So those are offsetting factors to it. So I think the market is feeling more like we need to get the elections over with right now. We need to get the elections over with right now. So we hope that it's orderly. That's actually, I think, a bigger concern actually than even the outcome. And we need to see what happens in the Senate, because any federal legislation is going to have to go through the Senate, or it will have to go through some type of budget reconciliation project, around March and April. So I think it's getting the elections out of the way. And then I think you're going to get back to what the market had been looking at before the elections. Where are we on the curve with respect to addressing COVID-19? Where are we with respect to a vaccine as well? And so I think the fiscal is a big part of it, but the tax piece of it is what the market had been focused on when it had some of the more bearish scenarios on a Biden administration. I think, though, the current mood is very much focused on a front-loaded fiscal package as something that the market hopes is forthcoming in the first quarter.
What do you think of course, you've been doing a lot of research on what's happening in terms of the wealth gap that continues to drive wider because of, in many ways, accelerated by what's happened in terms of COVID-19. Your perspective on whatever shape the economy takes, are you looking at what the outcomes might be of the election, of what happens within that wealth gap and whether people keep continuing to be left behind?
Well, I mean, we have seen the wealth gap widen, and we've done a lot of work on how this has affected financial outcomes across race, and also the 1% of the population compared to the bottom 50%. And we do see a widening wealth gap. This is why the fiscal package is so important. And we still have unemployment, at 7% at the end of 2021. So these concerns, I don't think, are going to go away very quickly. It looks unlikely that you're going to have a vaccine widely available and used, and it requires 2 doses until more like the middle of 2021. So I think the concern will remain very much on those gaps. And you're seeing that the private sector is stepping up. Businesses are stepping up. I mean, JPMorgan has announced a number of programs over the last couple of months to address this, whether it is the need to go to local communities and create jobs, or it is to increase lending into minority-owned businesses. All of these kinds of issues are front and center, and the ESG issues are really back on the table as something where it's a must-have for investors right now to have thought about the strategy around. It's not something that is just nice to have or that can wait till later.